I'm still in the camp that, this rise in Bitcoin is probably largely, at least a good chunk of it is due to the hope about the spot ETF. And then obviously halving comes after that. I still think that dominance continues in the face of the alts. And I think again that Bitcoin spot ETF, whenever it's approved, I mean, money is going to flow into Bitcoin from those spot ETFs. I mean, there's no doubt about it.
A Bitcoin ETF would serve as the first of a series of positive catalysts lined up for the cryptocurrency next year. Gareth Soloway, the head market strategist at InTheMoneyStocks.com, analyzed the current crypto market rally, suggesting increased money flow into Bitcoin post-ETF. Bitcoin fell Monday as investors took profits after its December rally. The cryptocurrency price was recently lowered by more than 7% at $40.887, according to Coinbase, after a significant drop Sunday night that took it as low as $40.300. Bitcoin topped $44,000 last week and traded just below that level throughout the weekend. Soloway noted ominous signals on the daily crypto charts preceding Bitcoin's downturn. Despite projections of Bitcoin soaring from $48,000 to $50,000 based on specific trends and Fibonacci retracement levels, these precursory indicators needed to be revised. Altcoins are poised to take center stage, unveiling new opportunities for traders and investors. The cryptocurrency market, renowned for its volatility, once again proves to be a realm of unexpected turns and exciting possibilities. Soloway thought about the vast jump seen in altcoins. He sees these as fundamental questions for understanding the market right now. According to CoinGecko data, Avalanche is emerging as one of the top altcoins, given that it has recorded a 102.9% increase in the past 30 days to hit $26.22 at the time of writing. Even though Solana has hit lows of $12 this year, it has emerged as one of the best altcoins because it has soared beyond the psychological price of $60. Let's focus on the video to explore Soloway's viewpoint in depth. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
The ETF index fund is like, you're banking on that 10+% per year in the stock market, always giving it to you, versus when you get these kind of middle grounds, the middle ground will be a combination of where people get a little bit of greed with euphoria, and then they get fearful, and then it just it creates a chop shop, right? So investors that are used to just those consistent longer term markets that grind higher, they're not going to get their returns, but it becomes much more of a swing traders environment. Absolutely. Yep.
Right.
Yep. So looking at Bitcoin, last night we saw this dump out. Couple things that I thought were interesting about the dump out. So even before the dump out happened, and I had a video I did for my members on the weekend. One of the things that I was looking at was these negative divergences starting to build in the daily charts of crypto, and that are honestly very negative. Like it is a warning sign. Now, it doesn't, listen, I still think we could go as high as 48 to 50,000. I know a lot of people are now saying that. That's the 618 Fibonacci retrace. There's a bunch of trend lines, if I zoom out, that go to major pivot points that converge right around that level. But you can't deny that you had a high pivot here on Bitcoin, and you went much, much higher on Bitcoin, and your RSI was here and it's much, much lower, right? I mean, that's what we call a negative divergence. And you can go to something like an altcoin like Solana, which again, Solana made new highs this weekend, getting almost to $80, and look at the divergence, right? So here's price at its high here, and that was down in this range on the RSI. And then here you went higher and you're much, much lower. And so I do think, for me, it doesn't guarantee anything. We know that no data guarantees anything, but it is something that just says, hey, maybe be a little bit careful in this range. Many people thought we would know by the end of this year, including myself. I thought by worst case, like November, December, we'd know if we were in a recession this year. And that obviously hasn't happened. But you got to figure at some point next year, it's either, okay, no, there's no recession at all, and now it's put to bed, or we do slip into that recession. And then you got the halving with Bitcoin, obviously the spot ETF we're waiting on. How does price ultimately, deal with that? And I'm still in the camp that, this rise in Bitcoin is probably largely, at least a good chunk of it is due to the hope about the spot ETF. And then obviously halving comes after that. But But yeah, it does make me wonder, especially with the altcoin moves. Like you look at some of these altcoins, they have gone absolutely nuts. I mean, we're talking hundreds and hundreds of percentage, 3, 4, 5x. Even on some of the bigger names like a Solana, Avalanche now is one of the big powerful ones. And is this really a new bull market or is it a fake out? I guess that's the question.
Soloway highlighted a few key observations. He pointed out the dominance trend line in the longer-term charts, suggesting that a potential pullback might be necessary regardless of breakouts and retracements before dominance achieves a new high. Bitcoin dominance hit a 2-year peak of 55% on December 4th, but has entered a steep downtrend since then, signaling that investors are redirecting funds to the altcoin market to diversify their portfolio and amplify gains. Based on some of the critical on-chain data trends observed this week, the altcoin season has kicked off. Soloway illustrated chart movements, noting that the altcoin's recent pattern deviates slightly from the expected course and prompts the question, is the altcoin run reaching its peak? After ending 2023 on a high, crypto investors will watch central bank interest rates and a U.S. regulatory decision on new Bitcoin products as they decide how to place their bets next year. Now, let's delve into the video to learn more about Soloway's perspective.
There's a couple things. So number one is let me show my charts here. Is that number one? It's been playing out exactly as it's supposed to, meaning that you had your previous high here. You broke up, consolidated, broke out, you retraced to the scene of the crime, then you broke out of the next one, retraced to the scene of the crime. Now, the only difference here is we only made a slightly higher high, and now we're retracing. I would just say that, the question is has the altcoin run come to a close? The biggest divergences, as I was talking about earlier on the RSIs, are in the altcoins. And it does make me wonder here, although again, this is the first time in a little while we're not seeing kind of the same sort of price action. Like once you hit this retrace here on dominance, it goes up and it should make, whatever high it makes, the next retrace should have technically stopped here if it follows the same logic. It obviously came below. So that's something to kind of keep an eye on. The only other thing I would just point out, and let me just erase all of these lines so we just kind of keep a clear sense of this, is that if we look at the longer term dominance, there's a pretty significant trend line. Look at this trend line. And so, maybe this is just a check back. I mean, regardless of those breakouts and retraces to the scene of the crime, maybe more than anything, dominance just has to kind of come back to this level. And that's where it's headed before it can make that new higher high. So in the very least, I could see dominance coming in a little bit more, not much. I mean, we're talking about 52.8 on my trading view chart here from 53.5. But, I still think that dominance continues in the face of the alts. And I think, again, that Bitcoin spot ETF, whenever it's approved, I mean, money is going to flow into Bitcoin from those spot ETFs. I mean, there's no doubt about it that, the mom and pops, they may be hesitant at first, but their advisors will be able to now say, hey, being in Bitcoin is an okay allocation for a small percentage. What the market is expecting in terms of rate cuts next year. And it's basically pricing in, I think, 130, 150 basis point rate cut. And at the same time, the markets are also saying, hey, we're going to have this beautifully soft or no landing scenario. And I think one of the things that we were both talking about is like, it's basically like, dude, if we have a soft landing or no landing, there's no way the market is going to get those rate cuts. And so, one of those two scenarios has to be false, but the markets right now are going on the narrative that somehow both will happen. And honestly, I don't know why the market's thinking that, or if it's just kind of an end of year, like we just want to be in the market and hope for the best type thing.
Galaxy Digital estimates the addressable market size of a U.S. Bitcoin ETF to be about $14 trillion in the first year after a launch, growing to about $26 trillion in the second year. What is your stance on whether the ongoing Bitcoin ETF approval process will meet expectations? Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.